If you're a high-risk merchant wondering how online credit card processing works, you're in the right place. I'm Charles Crillo, an onboarding specialist at Allied Payments, and welcome to our YouTube channel. In the next few minutes, I'll explain the full flow of an online credit card payment from the moment a customer clicks checkout on your website through the payment gateway and all the way to your bank account. You'll learn why processing fees exist, the role a payment gateway plays, and how your website communicates securely with banks to complete transactions. So let's get into it. Part 1. Let's start with the basics. Online credit card processing happens when a customer buys something without physically swiping a card, and we call this a card not present transaction. Here's the flow. Number 1, the customer enters their card details on your website checkout page. Number 2, the data is then encrypted and sent to a payment gateway. 3, the gateway forwards it to the processor, which talks to the card network and the customer's bank. 4, authorization is given. This is when the bank approves the transaction. 5, and then settlement happens, typically 1 to 3 days later, and the money lands in your bank account. For high-risk merchants, understanding this flow is critical because your transactions can trigger additional scrutiny, delays, or higher fees. Now that you understand the overall process, let's talk about what a payment gateway is. Part 2. A payment gateway is the secure tunnel connecting your website to the banks. Think of it as the messenger that encrypts your customer's card info and ensures it safely reaches the processor. Gateways come in 2 main types: hosted forms that redirect the customer to a secure page, and API integrations that stay on your site but handle data securely in the background. High-risk merchants need gateways with strong fraud tools, tokenization, and PCI compliance. Otherwise, you risk chargebacks or account freezes. Choosing the right gateway can make all the difference between seamless payments and ongoing processing issues. Next, let's look at where this all starts: your website checkout. Part 3. Your checkout page is a starting point for every transaction, and sometimes the end if it's not set up properly. When a customer clicks pay, your checkout communicates with your gateway to start the authorization process. First, your checkout page needs SSL and TLS encryption to keep card information secure. Next, PCI compliance ensures you meet all required security standards. A smooth user experience helps reduce cart abandonment and keeps customers moving through the checkout. And finally, fraud checks like AVS and CVV can sometimes slow or even block transactions, especially for high-risk merchants. So it's important to understand how they work and adjust their settings as needed. For high-risk merchants, optimizing your checkout is just as important as choosing the right gateway. So how does all this impact your bottom line? Part 4. Let's talk numbers because high-risk merchants feel them more than anyone. When it comes to fees, there are a few to keep in mind. You'll pay interchange and card network fees, plus charges from your gateway and processor. On top of that, there are monthly PCI compliance costs, and if a customer disputes a charge, you could face chargeback fees as well. As for settlement timelines, authorization usually happens within seconds, but it typically takes 1 to 3 business days for funds to reach your bank account. Pricing models matter too. Flat fees, tiered interchange plus, all have pros and cons, and high-risk businesses often pay slightly higher rates to offset potential losses. Part 5. So what makes a merchant high risk? Certain industries like CBD, supplements, travel services, and adult services often fall into the high risk category. High risk accounts come with higher fees, stricter rules, and closer monitoring. That's why you need specialized merchant accounts and gateways tailored to your industry. Proper documentation and thorough underwriting are essential, and using fraud prevention tools alongside chargeback mitigation strategies is critical to protecting your revenue. Part 6. Finally, let's talk about choosing the right gateway. High-risk merchants need to compare features, fraud detection tools, and security compliance scores. Integration with your e-commerce platform is critical, as are competitive rates and flexible pricing models. Reliable support and underwriting are essential for future growth. Choosing the right gateway can mean the difference between hassle-free payments and ongoing processing problems. If this helped you understand how online credit card processing works, hit that like button and subscribe for more payment processing strategy tips. If you're interested in accepting payments at your business, please contact us at alliedpayments.com. That's alliedpayments.com. See you in the next video.